Welcome to Digital Oil and Gas with Jeffrey Can. I'm Jeffrey. Digital Oil and Gas looks at the impact of digital technology on the global oil and gas industry. If you want to discuss this week's topic further, or just stay in touch, you can always reach me at Jeffrey Can on Twitter or at jeffreycan.com. Welcome back to Digital Oil and Gas. My name is Jeffrey and the host of the podcast. And today I'm joined by a great friend of mine, Samantha Stuart, who is with TC Energy. Samantha, welcome to Digital Oil and Gas today.
Thanks, Jeff, and happy to be here and a big fan of your work and the tremendous lift to both digital platforms and innovation across the energy space. Happy to chat with you today.
Thank you very much for that. It's sometimes it feels like a labor of love.
For all of us.
For all of us, indeed. Now, let's begin, though. The topic today, the theme for this conversation today is around the use of new digital tools to assist with the challenging role of planning. And by that, I mean short-term and long-term planning in what is an increasingly volatile energy world. And you're right at the center of this in your role at TC Energy. But let's begin first, though, with a bit of a background about yourself and where you've come from and how you're landed at such an exciting place as TC Energy these days.
Sure, Jeff. I've got roots in energy and started many years ago with Shell, and I worked in their upstream portfolio. And from Shell, had the opportunity to participate very early on into oil sands startups as we were building out provincially and then globally Alberta's very rich oil sands assets. And both of those companies were the entry for large multinationals to come into the basin and develop those assets going forward. Had the opportunity to be purchased by Equinor in one, and the other take public in what was at the time Canada's largest IPO. And from that, moved on to McKinsey and Company, where I worked in the private equity and energy practice, looking across a number of different investments, market entry strategies, and some operational and strategic work in terms of the energy landscape. So it's been a varied background, and what landed me at TC was both my interest in energy as well as the opportunity to bring some of those experiences to the team here and continue to tackle some of the challenges associated both with large enterprises, and then in addition to bringing innovation in, not necessarily digital, but innovation from the broader lens and new energy pathways. So it's a very exciting role.
Now let's appeal the first problem away here, which is this question of volatility. In your experience, are we in a particularly volatile time in the energy and resources industry, or is this a more normal in the grand sweep of things at the time that we're in?
That's probably the multi-trillion-dollar question. A lot of both companies that are in energy or along the value chain, in addition to those providing capital, in addition to those looking to help companies address some of their different problems. And my thought process on that, it really boils down to whether or not what's happening in energy is structural or cyclical. And that's across all modalities of energy. Just looking in the last year alone, we've tracked about $160 billion in fiscal and monetary stimulus that's been directed at green energy or new energy pathways to decarbonize. But yet we still have relatively robust demand for the commodities that we're transporting and that those are producing, and refining on the downstream. These are highly valued commodities that go into a number of end markets. We've also got a substantial global investment in infrastructure to both find, develop, transport, refine, and turn into the end-use products that we require. However, we also have a number of new energies, some not as new as others, for example, renewable platforms, that are being developed as the world looks to shift the energy mix and decarbonize across the value chain. So I think it needs to play out, whether it's structural or cyclical, but I think all of our signposts are definitely showing us that the energy mix itself is shifting, and it's shifting to have more of a mix of both electrification in addition to other modalities, perhaps hydrogen, perhaps nuclear, in addition to the molecules, highly valued molecules that we're moving around today.
It seems actually like every day now when I read the trade press, there's an announcement of a new fuel source or fuel opportunity. Most recent one, I think just yesterday, was ammonia as a jet fuel. And this, so there's a ton of money, a lot of money going into R&D into these different ways to tackle fuel. I have to conclude, though, that must make the planning work of a large corporation trying to navigate their way through this to be particularly challenging right now.
You know what, actually, I think it makes it exciting because these are, I guess the way I would articulate it is these are energy pathways, right? And if we start with how we think about the energy mix and the different pathways and scenarios that might unfold, it allows us, or at least we need to be able to be dynamic in terms of, thinking about and modeling what those may mean and, how different organizations, ourselves included, would choose to participate. We also have to watch, I think, scale, because where we may not be a first mover at TC, we would like to be a close second, for example. I think there's other organizations that may be first movers, and so they'll be substantially more dynamic in their planning and thinking and iterations as they try to understand how these different modalities or energy sources, types, companies, ideas fit within their broader lens, and where they may place strategic bets. We're a very large organization, roughly $100 billion in enterprise value. We have certain risk preferences, and we've got certain structures in terms of the cash flows that we seek to develop and the projects that support that over time. So we're a bit of a different beast, but I have to say I have the advantage of both strategy and portfolio and innovation. So I can kind of look at all of these different pieces of the puzzle, and it's quite exciting. It's quite exciting for planning.
Well, I have to admit the era where you could take last year's plan, add 5%, and call it this year's plan seems to have receded as a planning model. There's now way too much more variety to be accommodated, I know in the last couple of years, when you started into this role, you and I had a chat once over lunch where we talked about the mechanics of even preparing and doing planning was particularly was quite fraught because manually intense. The effort it took to say cycle through multiple scenarios was very, very demanding. Took a long time, and that seemed to be flying in the face of what appears to be a need to be a bit faster and more accelerated in one's thinking. How have you approached that challenge with in the context of the planning and portfolio work?
Yeah, and first I have to separate the planning and evaluations piece from the strategy and portfolio work, and I'll speak to the strategy and portfolio work. The challenge we had was being able to take a number of different energy scenarios and then take our base business and all of the cash flows and everything associated with that, and basically say what would happen under that scenario? What would the implications be? How would we unpack some of the opportunities? How would we look at, how we think about our footprint? And so that tended to take a fairly long time because we had a number of very good but manual processes to be able to work through that. And if you think about in the last 2 years, it's interesting. If I go back 2 years ago, in our annual strategic planning process, it culminates in a meeting that we have towards the end of the year as we work through our thinking. the slide that I showed, I pulled together a number of about 50 events. Just some take privates, some acquisitions, some of the impacts of what was happening in California relative to fires, some other global events, sanctions, et cetera, et cetera. Wow, this is a busy year. And you can see the number of scenarios you have to think about. I sure thought by the time I started this year that the slide would be, great, we're back to normal. Instead, we had a global pandemic, we had, the OPEC price collapse, on and on and on. So it has been exceptionally, in this small cycle, if you look at these few years, a really tough time. And what that's meant for us in these groups is that the number of scenarios and opportunities around portfolio construction start to increase as you start to both look at risks to the broader energy system and the opportunities that might be derived from responding to those risks or just looking at different pathways of change. So we look to a way to sort of speed that up. So working with our corporate planning group as we pulled that broader enterprise model, starting from there as a base, what we wanted to do was have a tool that very quickly we could say, what about if I thought about this acquisition? What about if I thought about looking at these types of risks? What would that mean for our cap table? What would that mean? And it allowed us to quickly build out as we thought and articulated around these pathways. It allowed us to very quickly model out both the quantitative impact as we articulated the qualitative impact. And it's helped us unlock some new opportunities that we didn't necessarily see before. But more importantly, it's also given us a very quick way to ask those critical strategic questions, set objectives, and quickly test them and refine going forward. So that's made a tremendous, and we have a small team where we run a very, very, very efficient organization, both in my shop as well as the planning group. Very, very sophisticated, and it's been a substantial help to be able to have that tool where they can quickly run that. So that moves them less from the tactical sort of spreadsheeting, more into the thinking, debate, and problem solving around. Look, how can we build an optimal portfolio? What would this scenario do? So it's quite exciting, and I've seen the team really unlock some value.
And what is the tool that you're using that does this?
We went through a process to look through a couple of different tools. We had a fairly, it's a large enterprise, and we've got some pretty dynamic requirements, and went through a standard, identify, evaluate, decide process, and we have landed on Anaplan as our tool. And so it's a corporate planning enterprise-wide tool. We right now are just looking at the portfolio and scenario optimizer piece, and that's what we're foundationally looking at this stage and starting with. And we've been quite delighted. The team was very good. They worked very closely with my team, and they've been very good to work with.
So providing support across multiple scenarios, but at the same time being able to process that analytic at speed. Sounds like one of the key features here. Yeah,
absolutely. I mean, things are, look, I think I hear a lot of challenges being raised through energy transition, and I hear it in terms of a term I'm a bit reluctant and not so convinced about, legacy energy. I don't think it's necessarily legacy. I think we have some tremendously important and highly, highly valued commodities that we still require. But as new modalities are identified, that has created some very interesting opportunities. And continentally and globally, we need a tool that we can explore both, how do we create value in our existing footprint? And then as we look at what we can kind of bolt on or think about, or further new modalities of energy, we will look to broader partnerships. We look to be a partner of choice. We've got some excellent partnerships now. if you extend along the value chain. And we need a tool that we can quantitatively assess these opportunities and be able to work well with our partners as we unlock new value.
Just one example of this in my experience has been the intersection suddenly of what used to be end-to-end value chains that didn't intersect with each other except casually, right, or maybe coincidentally. But suddenly these value chains are now not only intersecting, they're becoming tightly intertwined.
Absolutely.
A molecule.
And Jeff, you're dead on about thinking from a value chain perspective. That's becoming more and more important.
Yeah. I mean, I just finished a live stream this morning with a company, Stahl Group, a chemical manufacturer. And the chemicals they use are for treating fabrics to give them durability and color fastness and water prevention, that sort of thing. Cars and clothing and other industrial applications. They're being asked by their customers to be able to explain precisely where the chemicals have come from and where they've been used throughout the entire supply chain.
Exactly.
Part of an ESG initiative.
And I think and that's exciting. And I think what we're going to see is many years ago at McKinsey, I had the opportunity, we do offsites in Cambridge. And of all people, we had Bob Geldof and his foundation, and he came to speak to us. And he stood up with his cell phone and he said, "We still don't know the power of the cell phone, what we can do with this thing," right? We think it's just something we call. We phone our friends. Maybe we check some data. Maybe we look at some emails. Several years later, it supported toppling of some dictatorships, and we don't know where these things can go, right?
Yeah, exactly.
I suspect when we think about advanced materials, when we think about what we can potentially do with carbon, we're just at the tip of the iceberg in terms of where this can go. And it's important for companies that are producing, delivering, or processing any of these materials, commodities along the value chain, to be able to be nimble, to be able to adapt, because I truly believe the analogy of we don't know what we can do with this yet is quite prescient, and it's still in the back of my mind. So, and
it's something we've had now for almost 15 or 20 years. That's the iPhone is a 15-year-old product now.
Right.
We're still discovering its utility.
Yeah,
it's a pretty profound statement.
Absolutely.
So on the question of sectoral industrial planning, is there a role somewhere at a sectoral level to be able to forecast out or scenario plan how these sectors are likely to unfold? And here I'm thinking, in TC's case, you play a specific role in a specific value chain, and you're exploring well beyond the out into this broader landscape of energy consumption. But if you think about it imagine an OPEC nation where much of your national wealth is tied up entirely in how you manage and deal with a single supply chain, oil potentially. Is there a role for these kinds of digital innovations and digital tools to provide a much broader sectoral view of investments across a much bigger landscape than, say, just within a single company in an environment?
That's a good question. I haven't put a lot of thought into that, but maybe if I take a corporate view and I extend that box to, the different partners and participants or stakeholders along the energy value chain, I absolutely think there is. And when I think about policy and what's needed to bring both industry, government, and this can be anywhere, and various stakeholders together, there needs to be a quantitative understanding of what commercial underpinnings are required to advance some of these different modalities.
Precisely, yeah.
And I think these tools are important to not only have the qualitative pathway defined and the why, but also the quantitative supports and thresholds that are required to allow some of these, say new pathways or different technologies to evolve, because you need an incentive or at least a comfortable base for industry to advance some of them. Because if the commercial underpinnings aren't there, we have shareholders, we have stakeholders, and we have, for example, our risk preferences in place to both continue to, be there for our shippers in addition to deliver to our shareholders and create the solid, long-term organization that we have. So I think that's quite intuitive of you. And I believe there is a role, absolutely. And that isn't to say that the different nodes or very, very bright people that are focused on this now aren't doing it. But what I think a tool such as this allows for is that quick iteration and that collective thinking in a transparent way where the numbers and the economic and financial foundations can be analyzed. So I think that's very important.
Yeah, here I'm thinking specifically about green bonds and green money. There's a fair amount of capital sitting on the sidelines that wants to invest in decarbonization efforts.
Yeah, transition bonds.
Precisely, yeah. If you can't get the transparency to understand the economics, if you can't model out the scenarios, if you can't understand and price the risk correctly, even with the green bond world or even more novel currencies, then the money's going to sit on the sidelines. And so the more we can sharpen it up, the more we will entice that money to support the changes we all seek. So.
Yeah, and I think it is evolving. It's in absolutely no way do I ever question the sophistication of financial institutions that have structured these. I mean, They have incredible, abilities there. So I have, a high degree of confidence. It's the intersection of the two and the ability to create markets, and to some extent, create markets at scale. I know for large organizations like ourselves, like I said, we're a close second. But again, we may choose to make smaller bets, but our business is at scale. So, and I think actually the other opportunity, thinking of transition bonds and green bonds, and the prowess of the financial institutions that have creatively thought of these as financing mechanisms. Another opportunity too is when I think about broader ESG themes. And for example, our work with partnerships with First Nations groups is, is there an opportunity for, as First Nations groups are also building up, and many are sophisticated already, but building up the capacity, to think about this and qualitatively participating and financially participating in energy transition. Is there opportunities for tools like this to bring some of that expertise in-house for them to also quantitatively look to things? Because I know in our experience, it's been a tremendous help. And I would think, it'd be an interesting opportunity there as well to either hone the existing bench strength or build some new bench strength.
Yeah. Let's turn to this, the reactions that you've experienced when you take the ability to cycle through multiple scenarios faster and faster with richer piles of data to get to sharper conclusions. What's the reaction internally when you do this?
It's been it's been interesting. There's part of it is more, and it's unlocked the ability for us to ask questions across the organization and start to re-examine and think about how we can do portfolio construction and think about, are there opportunities for us to refine? We have a very good capital allocation process right now, but think about opportunities. Are there tweaks we can make to refine it? I would say within TC, it's just the ability to do those quick cycles. It's just leading us to go, are there certain questions that we would ask, scenarios that we would run that we could make a bit more static, and then take a portion of our, incorporating that volatility in, and then have those asked and problem solved on a more frequent basis. So I think it's allowed folks to say, okay, now we can go from the mechanics to tweaks and refinements and build on our foundation. Yeah. So it's good. Yeah. It's really positive.
Well, it'll accelerate the application and utility of it, and it's, over time improve the quality of it. Does it also open up the places or opportunities where planning activities, because all kinds of planning goes on in energy concerns? Are there other places where the application of these newer technologies could have a material effect? And here I'm thinking in different kinds of planning scenarios that people might be undertaking.
I'm sure it does, but I think from our company's standpoint, I think there's definitely opportunity. But if I look to my past and I think across different energy companies that I've worked in, or been able to consult and advise, that integrated planning is something that is a very, very powerful opportunity if you can kind of go end to end. Yeah. And I've recently reached out to some large multinational organizations that I either know from my previous life or just via connections, just trying to get a sense of how do they think about this and how are they looking at incorporating some of that quick change into a very solid platform that works end to end already. And what I'm learning is that there's a number of companies that are evolving there and tweaking their current process. And that end to end systematic approach, and whether it's one or many tools, but it's the process. It's understanding that end to end process and the clear roles, and then quickly building, adaptive decision making throughout is something that a number of organizations are looking at, because the challenges are coming fast and furious, and some require a response, some require we need to let this evolve. We need to understand where this is going first before we react. And some are sort of in that middle lens is, this is in the crosshairs. We're just not sure if we need to do it today, tomorrow.
Yeah, exactly. What lessons have you taken from the at a more personal level, the actual energy and the effort it takes to roll out this kind of newer way of approaching planning?
First, I have to hand over tremendous compliments to my team. I've been very, very lucky. I have an extremely talented group of people, both on my strategy and my portfolio bench. They are excellent. They're collaborative. They're fearless. They love a challenge, and they just to go, okay, let's link the opportunity. Let's look at the tool. And they just ran. They were excited. They were energetic. They couldn't wait to get in and understand how this worked, roll up their sleeves, and then make it work. Yeah. Another learning for me is just how, when you start to have the opportunity to pull in different partners across the company, just appreciating with deep respect the expertise. And trusting in that expertise. It was a bit of an opportunity to learn, how do different parts of the business work. And we had the luxury, especially under COVID, it was a real challenge under COVID. Both getting folks to share their expertise and to participate and really want this to be successful. And a tremendous learning there. And the other thing I have to say too is doing this under COVID. My learning is that it amazes me what people will do when they're excited about something, when they see a common goal. And regardless of the fact that we probably spent far too many, certainly my team spent far too, I'll have to buy them all glasses, my team, many hours on a small screen working with their Anaplan partners, who hats off to them as well, including the folks who were helping us integrate the software. It's nice to say I really enjoy working with my team. I'm very happy, and they did a tremendous job.
Well, it underscores actually one of the key messages about these novel tools and technologies. It's actually not about the technologies necessarily. It's about the people and the team and the culture. Right. And if you don't put that into place.
Just saying, you know what, we want to be a top-notch. We're going to build on our success, but we want to be a top-notch organization. Yeah. And they are. They've done a tremendous job. So
yeah, hats off. Samantha, this has been a terrific conversation, learning about this whole world of strategic planning and portfolio shaping and how innovative tools are enabling that process to react with finesse and agility in what is an increasingly volatile but exciting world. And thank you for coming on the podcast today.
And thank you, Jeff. And again, the community you've created and the work that you've done, hats off to you and to folks that listen. It's a journey. We're all on it together, and let's make change.
Let's make change. I love it. Thank you so much. If people want to learn more about TC Energy, you couldn't get a simpler, a tighter name now. But what's the website, just in case people don't know?
tcenergy.com.
tcenergy.com. There you go. Thanks again. This has been another episode of Digital Oil and Gas. And if you like what you've heard, by all means, hit the like button and share this with your friends or leave a comment. And I'll certainly be the first to get back to you. And join us again in a week's time with another episode. Bye for now.